Hello, welcome back to this week's market update. We hope everyone had a nice long Easter weekend. Today is Monday, April 21st, 2025, and we will jump right in. It was a quieter week on the economic data front, but Q1 earnings were in full swing. We saw stocks move lower with much of the decline coming on Wednesday here as Nvidia and AMD reported that they expect to incur additional export-related charges in addition to some cautious remarks from Fed Chair Jerome Powell on that day as well. As of Thursday, April 17th, the Dow Jones Industrial Average fell about 2.66% on the week, dragged lower by a really sharp sell-off in United Health, which we'll take a look at in a few slides here, followed by the Nasdaq Composite, which was down 2.62%, the S&P 500 down 1.5% last week, and the Barclays Aggregate Bond Index up almost 0.9% last week. Taking a look at some economic data from last week, we did get the retail sales numbers for the month of March coming in a lot stronger than expected as consumers appeared to front load purchases ahead of the April 2nd tariffs, many of which have been lowered since their original announcement. Month over month, we saw retail sales up 1.4% in the month of March, 4.6% higher than a year ago. And the largest contributor to this sharp increase was auto sales. You can see that was up 5.3% month over month, which is quite a heavy jump in one category of sales there, so auto sales. And this was up 8.8% from a year ago. April's post-tariff data will be the indicator as to whether or not this is a jump in retail sales from economic strength or if it is consumers trying to purchase ahead of any tariff impact. So we'll have to watch and see how the data pans out in the coming months, but it did come out to be a very strong month of retail sales in March. Moving along in our week, both Nvidia and AMD issued warnings last week about the impact of new U.S. trade restrictions to China. Nvidia expects up to $5.5 billion in charges tied to halted shipments of some of its chips. AMD expecting up to $800 million in similar charges. With a lot of trade headwinds and uncertainty about growth, you can see both stocks have underperformed the S&P 500, which is down about 10% year to date as of Thursday last week. Both chip stocks down more than 20% year to date. So growth sectors, including these chip makers here, taking a pretty big hit relative to the index so far year to date. Shares of United Health Group declined sharply last Thursday following a first quarter earnings miss and downward revision to forward guidance, largely driven by higher than expected medical costs within its Medicare Advantage plans. The results raised broader concerns across the managed care space, with some analysts warning that elevated utilization trends could pressure margins for many other health insurers as well. And you can see here, United Health Group stock was down over 23% last week, mostly between Wednesday and Thursday on this news. Last but not least, taking a quick look at where we are in the earnings season. Still pretty early on, about 12% of the S&P 500 companies have reported posting positive year-over-year earnings growth of about 9.1% of those companies that have reported, and about 7.2% earnings growth in companies that have yet to report. We've seen some pretty strong results in financials as well as real estate, technology so far, although very few companies have reported, and near cyclicals, which are all good signs. On the other hand, categories like consumer discretionary, which again, only a few companies have reported, but that's taken a pretty big hit there, as well as consumer staples. So interesting stuff here. We'll have to see how the rest of the earnings season pans out. The week ahead, we have Tesla and Google reporting, and then in the following week, we have Amazon, Meta, Microsoft, and Apple set to report. So some pretty big earnings reports coming up in the next few days. That concludes this week's market update. We thank you so much for tuning in, and we look forward to seeing you again next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.